Hi guys, welcome back to our YouTube channel. Today we are going to talk about fair value gap and how to trade fair value gap in smart money concept. So actually we are teaching you that how to trade in smart money concepts, and today what we are going to talk about it is fair value gap. So we will tell you that what is fair value gap and how you can work on it and how you can understand it and use it in your trading and how to make more profits. So first of all we will take an example of a fair value gap, and then we will go forward from here. So first of all, for example, when we are going to learn about fair value gap, so we will be having like three candles, for example, three candles here. So we have these three candles. So if there is a time, when the market moves very fast, very quick, so what you have to do, you only have to wait for the candles when they form in the way that there are the big candles in the market, or just, and as soon as you see those big candles in the market, so you would know that there is an imbalance has been created in the market. So that will give you the clarity that where the fair value gaps is. So for example, whenever the market start moving, for example, if there is more pressure in the market, like the buying pressure or the selling pressure, so you will see the big candles are coming in, and at that time you will see that there are some institutions who want to buy, but they won't get the chance to buy at that point, so they will bring the market down to that level. So we just have to understand and identify those areas where the market has been before, and where those fair value gaps or imbalance has been created, because the market will come to those imbalances and they will take place their orders, and that's how the market will move forward again after a reversal. So we will just tell you here that how this fair value gap has been created. So first of all, what you have to do is, for example, this is your first candle. It is actually based on three candles. So first candle, you have to select the high of the first candle. So for example, this is the high of the first candle, and then the second, you have to mark from here until the low of the third candle. This is our third candle, right? So we will mark until the low of the third candle. So this is the difference. This is the difference we will mark, right? We can change the color of this so that it would be easy for us to understand. And no, yeah. So these are the two, for example, three positive candles which are bullish candles. So what you have to do is take the high of the first candle and take the low of the second candle, and the difference between these two candles, you have to mark that area. Now we have highlighted this area, and this is our fair value gap. Now you can see that this is the bigger candle which has created the imbalance, and now the market hasn't covered this whole area because the first and the third candle hasn't crossed their paths. So now this is clear that this is the area where fair value gap has created. So once we have marked this area, when we have marked this fair value gap, so we will wait until the market, for example, from here, market will come down to this area and retest it. And at the point of retest, what you will do, you will wait for the reversal and then take your entry. Whenever you will see the reversal, even you can go into the shorter time of period and you will see that where is the reversal. So as soon as you will see the reversal in the market, you will just take the entry, and then the market will reverse upward. And now there is one thing which need to be clear, and that is our take profit, that where you will put your TP. So your take profit would be at the high, the previous high. For example, if the market was moving upward from here in a bullish side, so this is our high, right? And from here market took a reverse and retested our fair value gap, and then here we have initiated our trade, and we will wait until this previous high, and we will put our first TP here, and we will make an exit right from here onward. And if the market, if you don't want to put your TP, because this is our first TP, this is our first target where the market will go, and market can reverse from here, so you have to put your first TP here. And if you want to extend your trade, there is only simple thing what will happen. For example, if here is your trade and you have put your stop loss here, so you can just move your stop loss at the break-even level, and then you can leave the place. You can leave this trade. Why? What will you do next? That is the most important question. You will wait until the market is going upward, and your next target would be previous any high or resistance level. For example, on the chart, if there is any previous high or resistance level, so that is where your next level would be for that TP. Or you can wait until the market will show any kind of reversal. For example, any kind of change of character or any other reversal sign. So when it will show, you will just take an exit. So now you understand your entry level is at this level. For example, this level will be your entry level. For example, market will come and retest this area. When it will retest and give a reversal, you will take an entry and wait until the market will go to its first TP, and that's where you will take the exit. Otherwise, you can extend your trade and just put your stop loss at the break even, and you will wait until the market will give any kind of reversal signs or change of character. Then that's the point where you will exit the market. Now I hope you understand. Now we will tell you that where you can enter the market. So that is the next point. So for example, we already taught you about the ICI pattern. So the market moves always in ICI patterns. Impulse, first one would be impulse move, second one would be second move would be corrective move, and the third one move will be again the impulse move. So what we will do, you have two options to trade from here. First one is, for example, this is ICI pattern, right? And we call it 1, 2, and 3 pattern as well. This first wave is ending here, second wave is ending here, and the third point is here at the top. So what will you do here? You will identify only those fair value gaps. Now this is the point which is very crucial, because it will give you the more accuracy. Why? Because for example, if you have a fair value gap here, maybe market will come down, and the correction or the authentication of those are, the level of accuracy will drop if you will do any trade on other fair value gaps. So you will only look forward to what those fair value gaps which are near to the point 1, which is where our first move is, first wave is, wave 1 is ending, or wave 2, near to the wave 2. If you have any fair value gap here, so you can trade this one as well. So for example, here is our point 1, right? The wave 1 is ended. So if the market has any fair value gap here, left any fair value gap here, so we will mark this area as well, and then we will, which other area we can mark, that is near fair, level 2. So these are our 2 points, right? So near the level 2, near the wave 2, we can mark this fair value gap and this one. Now why we are marking it? Because we have other support and resistance level here as well, and also these are the critical levels where the market take the reversal from. And usually whenever you will see the market, if market will come down, so you will see that it doesn't cross, normally most of the time it doesn't cross the previous high. Okay, so from here market take the another move, take a reversal, and then it start moving toward a bullish side or its original trend side. So that's why it's very important. And the second most important point is that, for example, if you are buying, if the market is coming down here and there is no fair value gap here, so then you can wait. If we have any fair value gap near this level 2, for example, here near the point 2, if we have any fair value gap here, so we will wait until the market will come to this point and take a reversal and show any reversal sign here, and then you will take the entry and you will wait until this would be the our first target. Okay, so that's what I have already told you. So now there are 2 points where you can take the entries. First is wave 1 or wave 2. 1 or 2 are those points where you can take the entry in the market if you have any fair value gap, and then you can wait until the previous high. This would be our target. The first target would be, I already told you that it would be our previous recent high, and that is where we will exit. This would be our first TP. The second TP you can extend it a little bit by, if you don't want to exit from on your previous high, then you can extend this trade until the market doesn't show any kind of reversal or change of character. So if it will show any change of character, or if it will show any reversal, then you will exit from that trade. That's the most important thing. And now that if you are already here, and for example, yeah, so if you are extending this, so what will you do? Simply one thing you can do, one thing you can, for example, here our trade was, so we will just, for example, our stop loss is here, so we will just move our stop loss above the break even level. For example, our trade is here, so we will put that stop loss a little bit above our trade level and break even level, and that's where our trade would be totally safe. We are in profit. It doesn't matter if it's small or big, but now we can wait for this trade to go up as much as it is possible, and we will wait for any reversal. Where the market will show any reversal, we will make an exit, and that's how it is going to be a very big trade. This is the best way to trade, make long trades, and you can wait for the bigger profits rather than cutting a small profits. So that's how you can go forward. I hope you understand. First, I told you that what is fair value gap, what fair value gap is, and the second, I told you that where you can trade the fair value gap. The first one is near your point 1. For example, this is ICI pattern, so this is 1, 2, or 3. So these are the 1, 2, 3 pattern as well, ICI pattern as well. So if this is your first 1.1, this is your point 2, this is your point 3. So if market reverses from point 1 or point 3, so you will wait until point 1, and if there is any fair value gap, you will take entry on the any reversal sign, and then you will wait for your TP. Or either other way, if there is any other case, so if there is no fair value gap here, so you will wait the market until it comes down to level 2, and if there is any fair value gap, so you will take the entry from here, and then wait until your first TP, or you can extend it by raising your stop loss above your break-even point. So I hope that you understand this point. So now let's see, we will move toward real charts where we can tell you that how to trade these fair value gaps. So can you identify any fair value gap here? If you can, so it would be really nice if you would be able to recognize any fair value gap. So I have given you enough time. If you can find it, you can just pause the video and try to find it. So first of all, our fair value gap is here. What I told you, this is a downward trend, and here we have the first candle, its low is here, and the third candle is high is here. So there is a huge gap between the both. So it is imbalance, it is fair value gap. So that's where we will trade this. So we will mark this area. So what we did, we marked the area between our first candle's low and third candle's high, and this is the difference between these two candles, first and three candles, and this is the area where our fair value gap is. So what happened to the market is that it reversed from here, it entered, it retested this area fair value gap, and then it was our time to enter the market. What we will do from here, we will sell the market on the reversal point. You can go into the smaller time period, and then you can sell your trade from here, and then the market will come down, and you know it that it will come down. So where is your first TP? The first TP would be at your nearest the first TP will be at your nearest low. So recent low would be your first TP. So you can exit your trade here, or you can extend your trade by simply putting your stop loss below this your trade break-even point, and then you can continue from here. So I hope you understand this point right now very well. And then, for example, from here we have already this trade is already in profit. Now a lot of people would say that this market came again in the fair value gap. I would say that our trade has already been executed. This fair value gap has lost its value. Now it is another trade. Of course, I can tell you a little bit in this video, but this what I'm going to teach you here, that is for another video. You will see about the supply and demand video, and where we will be telling you that how to trade this area. So what happened here when the market came here? So this is our, for example, this was our first wave, and this was our second wave. Okay, so this was our 1, this was our 2, and this is our 3. So market take the reversal from here, and it went to where? it went to our second point. These are the videos I have already uploaded, so you can just go there and you can watch those videos. I hope you will understand and you will learn everything about it. So now you have only 2 points. I already told you there are the 2 major points where you can enter in the market. First is your level 1, second is your level 2. Okay, so this was your first point to second point, and this is the third point from where the market took the reversal and went up here. So it came exactly to where? It came exactly to point 2. So when the market comes to point 2, you will find a supply, or you will find any order block, and if there is any order block, you will sell the market from here, and that's how you can continue your trade. So if you have entered from here, and there is another thing, that this high has just penetrated a little bit above this high. So that is what we call the false penetration or liquidity grab. So market has grabbed its liquidity when it was going above the previous high. So people started thinking that, okay, market is going back again. But when you see any liquidity grab and candle closes below, it confirms that the market is going to go in another direction. So it will just started falling from here, and you can see that how much profit you have gained from here. Your first target was here, and the second target you can increase until the market doesn't show any kind of reversal pattern. So it hasn't shown any reversal pattern until now, so your trade is already continued. But this was not our point in this video to share. Of course, if you want to watch about order blocks or any other videos on supply and demand, so we have updated on our channel, so you can go there and watch. And now we can look forward for another order block. Well, can you find any other order block where we can take the entry? This is our other order block. This is our first candle. Its low is here, so we will mark the low and we will mark the high of the third candle. I hope you understand. This is our first candle's low, and this is our third candle's high. And when you mark this area, the difference between both, this is our fair value gap. And what will happen? Market came down, and then it gave us reversal, and it entered in this. If you can see, it has entered a little bit inside the fair value gap and tested that area. And I told you, when it retest that area and give any kind of reversal point, so you can just sell from here, go into the smaller time period and see any kind of reversal from here. And when you see the reversal, you just enter in the market, and you can sell your position from here. And then you can see that your first target was previous low, which is our level 2, and this is our first target. You can exit from here either, or you can wait until the market goes down again and again, and there would be a final point where the market will give us any reversal sign, and then you can exit that trade. So now we have told you, I have cleared you about 2 fair value gaps. The first one is here, the second one is here, and these are the 2 which has mitigated these fair value gaps, and you have seen the profits already in these levels. Now, can you find any other fair value gap which is not, of course, which is still in progress, which hasn't been played yet? So this is our third fair value gap. I will tell you how. You can see this is our first candle, this is our third candle, and first candle's low and third candle's high has a gap between, there is a gap between them, and this is fair value gap, and this is imbalance, price imbalance, and this is near where our point 1. Okay, this is our 1, this is our 2, and this is our 3. So this is near our point 1, and now we have marked this area fair value gap, and whenever the market will come down to this price, it will reach, for example, now market will go this area, in this area. So what will you do? You will just go into the smaller time of period and find a reversal point, and when the market will show you any kind of reversal point, you can sell from here, and then you can go until your first target, that would be the previous low. If market intact this low and goes up here, so you will sell from here, and your first target will be the previous low, and then you can extend this target by, for example, if you have kept your stop loss here, so you can just bring your stop loss down below this your break-even point, and then you would be in profit. So you can leave the market prices, and the prices will keep coming down until you will see any kind of reversal when you will see any kind of reversal, you can take the exit. So I hope you understand now that what we are going to teach you, what we are trying to teach you, and now it's very important, and you have seen the results of smart money concept, how you can trade it. Everyone will tell you that this is how you are going to trade the market, but no one will tell you that how it works, which are the points where it works. Fair value gaps are everywhere, but does it work everywhere? No, it doesn't. You have to look for the obvious fair value gaps at the specific places, and that is the point where you will enter in the market, and you will go further, and then you will see that the results are coming, and you will, and when the points I have told you, that near the wave 1 or near the wave 2, those are the points where you have to buy or sell or trade your fair value gap. So when you will do that, your accuracy level will go from like 40 to 50%, from 40 to 50% to 80 to 90%. Okay, so whenever you will do your trade, it will be accurate up to 90%. So that is the results which brings, and I hope you people like. If you people like the video, please like our videos and subscribe our YouTube channel and share it to your friends, so that we can make more videos. Of course, it will give us a lot of confidence and a lot of motivation to bring more videos on education about the Forex and other cryptocurrencies, and we will be telling you the strategies which will work for markets. So I hope that you people like this video. Just subscribe our YouTube channel and like our videos, and have a good day. Take care of yourself.